the SEC, the Securities and Exchange Commission, the BIR, the Bureau of Internal Revenue, BSP, Bangko Sentral ng Pilipinas, and other legal institutions demand financial accounting information to monitor the business firm's compliance with laws for public protection, price setting, and for setting tax and other regulatory policies. Now, you may ask why customers and potential strategic partners demand for financial accounting information. Customers, both current and potential, need accounting information to evaluate a company's ability to provide products and services as agreed and to assess the company's reliability and staying power. Potential strategic partners would wish to estimate the firm's profitability to assess the fairness of returns on mutual transactions and strategic alliances. So, of course, you're a customer. You really like this product. Okay? So, you need to assess the staying power of this company. If this company can provide the products and services that you need. Other decision makers. Financial accounting information are required for varied purposes by other parties, from assessing damages for environmental abuses to making policy decisions involving economic, social, taxation, and other initiatives. So these are the groups or the people that demand for financial accounting information. Now, let's move on to the sources of information about business enterprise. So in general, the quantity and quality of accounting information that companies supply are determined by managers' assessment of the benefits and costs of disclosure. In the Philippines, publicly listed companies must file financial accounting information with the SEC, or the Securities and Exchange Commission. So these are, what are these information? First, we have the audited annual report that includes the 4 financial statements. Again, what are the 4 financial statements? We have the statement of financial position, or known as the balance sheet statement. We have the statement of comprehensive income. Third, the statement of stockholders' equity. And fourth one is the statement of cash flows, with explanatory notes and the management's discussion and analysis of financial results. Second one is the unaudited quarterly or interim reports that include summary version of the 4 financial statements and limited additional disclosure. So all other registered corporations and partnerships are likewise required to file annually audited financial statements with accompanying explanatory notes with the SEC. Okay, so let's talk about disclosure. Okay, this is about disclosing information, especially now. For example, we can relate this, especially now that we are into social media. So what are the benefits if you disclose too much in social media, in your social media accounts? Okay, I will leave that question to you. We will just focus on the benefits of disclosure for the company. So the advantages of supplying accounting information extend to a company's capital, labor, input, and output markets. Companies compete in these markets. Okay? Again, company competes in the 4 markets. We have the capital, the labor, the input, and output. For instance, debt and equity financing are sourced from capital markets. And the better a company's prospects, the lower will it be its cost of capital as reflected in higher stock prices or lower interest rates. The same is true for a company's recruitment efforts in labor markets and its ability to establish and maintain superior supplier-customer relations in the input and output markets. So, if you disclose your company that the company is doing well in the industry, in the market, you could attract more investors, you could attract more talents to join in your company. The company's ability to disclose reliable, so these are audited accounting information about its products, processes, and other business activities enable them to better compete in capital, labor, input, and output markets. Now, if there are benefits of disclosure, there are also costs of disclosure. The preparation and dissemination cost of supplying information, accounting information, can be substantial, and the possibility for information to produce competitive disadvantages is high. Companies are apprehensive that disclosures of their activities such as product or segment successes or failures, strategic initiatives, technological or systems innovations could harm their competitive advantages. Companies also face possible lawsuits when disclosures create expectations that eventually are not met. Disclosure costs, including political costs, are high for highly visible companies, such as the large telecommunication conglomerates, oil companies, and software companies because they are favorite targets of public scrutiny. Okay. Now, so what are the constraints of relevant and reliable information? First one, we have timeliness. So if there is an undue delay in the reporting of information, it may lose its relevance. For example, the monthly report for the month of October will be presented, October 2020, for example, will be presented to you on January 2021. So what's the use of the report? You could not make a real-time decisions. It would just become a history. So management may need to balance the relative merits of timely reporting and the provision of reliable information. To provide information on a timely basis, it may often be necessary to report before all aspects of a transaction or other event are known, thus impairing reliability. Conversely, if reporting is delayed until all aspects are known, the information may be highly reliable but of little use to users who have had to make decisions in the interim. In achieving a balance between relevance and reliability, the overriding consideration is how best to satisfy the economic decision-making needs of users. Second one is the balance between benefit and cost. So the balance between benefit and cost is a pervasive constraint rather than a qualitative characteristic. The benefits derived from information should exceed the cost of providing it, of course. The benefit should exceed the cost. Okay, take note of that. The evaluation of benefits and costs is, however, substantially a judgmental process. Third is there should be a balance between qualitative characteristics. So in practice, a balancing or trade-off between qualitative characteristics is often necessary. Generally, the aim is to achieve an appropriate balance among the characteristics in order to meet the objective of financial statements. The relevant information of the characteristics in different cases is a matter of professional judgment. And the last constraint of relevant and reliable information is the true fair view of fair presentation. Financial statements are frequently described as showing a true and fair view of the financial position, performance, and changes in financial position of an enterprise. Although this framework does not deal directly with such concepts, the applications of the principal qualitative characteristics and of appropriate accounting standards normally results in financial statements that convey what is generally understood as a true and fair view of such information. So these are the 4 constraints of relevant and reliable information. Okay, now, let's move on to the financial statements. Okay, so this is the figure of how the financial statement links across time. Okay, so business activities are periodically reported by companies using the 4 financial statements. We have the statement of financial position, we have the statement of comprehensive income, the statement of stockholders' equity, and the statement of cash flows. Okay, so this figure shows how these statements are interconnected across time. A statement of financial position reports on a company's financial position at a point in time. Okay, this one, the statement of financial position, beginning of period. The statement of comprehensive income, the statement of stockholders' equity, and the statement of cash flows report on performance over a period of time. So this statement of cash flows, stockholders' equity, and comprehensive income over a period of time. Well, the statement of financial position at a point in time. Okay. So the 3 statements here, these 3 statements, cash flows, stockholders' equity, and comprehensive income, link the statement of financial position from the beginning of the period to the end of the period. Okay. So the linkage of financial statements. The 4 financial statements are linked with each other and link across time. This linkage is also known as articulation. And the statement of financial position and statement of comprehensive income are linked via retained earnings. Okay, we will have an in-depth discussion on the financial statements on its linkages on the next video. Okay, I would like to acknowledge the source. Okay, this is the source as shown there. Okay, and thank you for watching. Have a good day.